Hello, Mavericks. This is Imri, and welcome to today's market roundup. It is Wednesday, November 15th. So today we'll be doing a review of the trading day. We're going to be going over some meaningful news that came out of the day. We'll be taking a look at the broader equity markets as well as some commodities. We're also going to be doing some technical analysis on the major indices, including analysis on the market internals, and taking a look at the S&P 500 sector heat map. And then finally, we're going to explore some trading setups and opportunities, including some bullish setups, sideways setups, and bearish setups.
Disclaimer: this video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So starting off with some market analysis. So a pretty good day for equities across the board. All the major averages were up on the day. Funny enough, it's the Dow leading the way today, not the Qs. But the Qs were marginally up on the day as well. Oil and gold both down. So what's interesting, right, is that the percentage of stocks above the 50-period moving average is definitely in the majority, right? It's 66%. And then the advanced decline line shows that close to 60% of issues are advancing, with only 4% flat, 38% declining. So things are looking pretty bullish. We've gotten more encouraging inflation data at the moment. October PPI, producer index, is down in the biggest monthly drop since April of 2020. Now we're taking a look at the chart of the S&P 500. You can see we've had this blistering rally, this veritable melt up since the end of October. Now we are going to get a pullback. There's no question that we're going to get a pullback. The interesting thing is that although we're above both the 20 and 50 period moving averages, we have not had a bullish moving average crossover take place as of yet. So that's something that's worth noting. So we will get a pullback, and it's likely we're going to get a pullback in the market before we get that moving average crossover. You can bet that a lot of people have their eyes on the 20 and 50 period MAs. So that is something that we should watch out for if/when we do get that cross. I do expect the market to then fully get behind this rally, and we should get that Santa Claus rally to close out the year. Taking a look at the Qs, it's also a very similar story, but arguably the moving averages are closer to that bullish cross. But similar to the S&P, we are going to get a pullback here in the Qs as well. So just get ready for that. I think this current rally is very long in the tooth. Now, that being said, I recall saying something like that last Friday as well. So, just keep that in mind. Timing is of course very difficult to nail down, but today's price action is telling me that we probably at the very least put in a small local top. And if it does develop into something a little bit bigger on the downside, that's all right. Personally, I would like to see a very healthy pullback, shake some weak longs out of the picture, and then use that as a buying opportunity. Moving on to the sector heat map, you can see that we are seeing some big names pull back slightly today, like Microsoft, Nvidia, Amazon. But Apple up, Google up, and financials doing very well. Financials is a sector I was really shaky on, but JP Morgan's up today. Bank of America up, Wells Fargo up. So it's worth keeping an eye on that sector. Of all the sectors, that is one that is obviously very interest rate sensitive, similar to tech, of course, and other sectors of the market. But I'm very curious to see if there is a surprising disappointment on any inflationary data that's coming out. I'm definitely going to look to the financials for some bear market setups, as well as tech. So as far as the monthly outlook goes, we're still at a +2 because we don't have that crossover similar to the weekly. I'm very optimistic here, but I think we need to get a pullback first, which might disappoint some folks, and then we're going to get a really strong rally to close out the year. So that's personally what I'm looking for. Now, as far as potential trades go, a lot of the trades that I've had up on this board are still the same ones that I like. I've talked about AMD, I've talked about Nvidia. They've done really well. The bearish trades, on the bearish trade side of things, I had JPM on there. JPM hasn't gone down. So we're not going to bat 100% with 100% accuracy, of course, but by and large, these setups have been working out really well. Just want to draw your attention to AMD. I continue to like AMD higher. When I was pointing out AMD as a bullish setup, I think it was right around 100, maybe even a little bit below 100. We're at 117 now. It's a really nice rally. What I like about this setup is that it looks like we're going to pull back. We're quite far from the 50-period moving average, and we're either going to trade lower at a pullback or go sideways now. And either way, that should result in a nice bullish setup. So this isn't immediately bullish, but I still expect us to break through 130 in the relatively near term. So keep an eye on AMD. As far as sideways trades goes, Merck has played out really well. I mean, I think when I first brought Merck onto our radar for sideways trades, it was trading around $100, and it's at 101.42 now. Now, it does look like we want to break below this range, but we're having trouble doing so. So unless we break below that spike bottom from the end of October, right around $99 or so, I have to believe that we're going to stay stuck in this sideways range for quite some time. And then finally, Schnitzer Steel, it's looking like a fairly solid low base. I'd like to see a bit more sideways action before we break down, but this looks like a good bear setup to me, especially as we're finding resistance now along that 50-period moving average. All right, so in conclusion, markets are in extreme risk-on mode. This is not where I want to be chasing the market. I mean, no tree just grows straight to the sky. It's a very cliched saying, but it's absolutely true. And when we're seeing a melt up like this and you're not on that moving train, I think it's too late to catch it. There could be more upside to go, but the risk is starting to skew significantly to the downside. So I would strongly urge traders here to be cautious and pick their shots very carefully. If you want to play for the pullback, I think there'll be a number of somewhat bearish setups that we can take advantage of over the next several days. But ultimately, I think the bigger trend now is to the upside in the markets. So I don't know personally whether I'm going to play the short side here. It depends on how the pullback in equities unfolds. If in the major averages we get more sideways consolidations, I'm not going to look to play the short side in individual issues. However, if we get a more of a steeper developing pullback, that could present some bear setups, to take advantage of. As far as economic reports go, we've got unemployment claims tomorrow. There would have to be a very significant uptick there for in unemployment claims, I think, for it to be a major market mover. And then as far as earnings reports go, we've got Walmart, BABA, and Applied Materials. So all big names to keep an eye out for. All right, traders, nice, short, and sweet. That's it for me. Hope you have a great end to your trading week, Thursday and Friday. I look forward to seeing you in a couple weeks. Bye for now.